Right, good afternoon, everyone. It's 4:15 on Friday, the 1st of July. Yes, I'm not on camera, so let's share screen and get things moving. I've just getting over being a bit ill. Anyway, yeah, this is another example of why I love the pound Australian dollar. Just the way it moves. I like the way you move, etc., etc. Anyway, so we had this ignition candle here at about 1:20 in the morning, and you see from that point there, it's just gone on a jolly run upwards. So that was around 205 pips that it moved upwards till about 9:10 this morning, where it hit the peak. So missed all of that because I was sleeping, and I'm not one of those traders that likes to place a trade and leave it running overnight, because I prefer my sleep. And even though it normally place your stop loss, take profit, a trailing stop loss maybe, well, in fact, you probably should use a trailing stop loss, just so at least you can bag some profit when it gets to those levels. I just, even though I've done that in the past, I've put all those pieces into place, I've still just not slept well. I'm just always curious to know what's happening with the trade. And I know that's something that at some point I must overcome. But anyway, I still can't do it. But not to worry though, because I'm able to trade these lovely moves today. So that was 205 all the way up. And then if you're looking at this area here, if you were to get in right at the peak, which, let's face it, I doubt you'd get right at the top there, but pretty close to it, that you may remember from a previous video that I had this this dotted line here, which is an order block from the 30-minute time frame on the 10th of May. And if we just scoot left a bit more, we can see where it's come into play back here on the 24th of June. And it's come back up to that sort of level again. So it's just nudged just past that level. And in fact, I think I've got another one a little bit higher up. Yeah, there we go. So in case it carried on going further, we've got another level a little higher up here, which is from an order block from the 25th of April. So you may be looking at this thinking, what on earth is going on? What are all these squiggly lines here? What are all these squiggly lines here? What are all these squiggly lines? And what are these squiggly lines? So let's make it a bit more easily understandable. So what we have here is the multi-time frame stochastic, which was developed by one of my trading buddies, Kevin. So it basically has different time frames. So the blue and the red is the current 5-minute time frame that we're currently looking at. The green is the 15, the white is the 30, the orange is the hour, and the yellow is the 4-hour. Now you can see that because we're on the 5-minute time frame, the blue and the red are quite nice and smooth, but the others are more jaggedy because they're higher time frames stretched out on a lower time frame. But it gives you an idea of what the stochastic is doing on those other time frames at the same time. So when you get a convergence of more than one, so for example, this point here, and you've got this different colored background as well. So it's quite bright red when there's more time frames up in the extreme, or quite bright green when there's more time frames down in the bottom. So down here, for example, we've got the 5 minute, the 15 minute and the 30 minute. So it's quite light green. Just before it is just a darker green because only the 5 minute was down in the extreme. The 15 and the 30 hadn't quite made it down that far. So up here, for example, you can see we've got this convergence of the 5, the 15, the 30, the hour, all up at the top there. The 4 hour hasn't quite made it up there, but that doesn't matter too much because it's the 4 hour. It takes a lot longer to move than the lower time frames, obviously. So we have that convergence of those there, and you can see that from that point, price started selling. And if we, yes, I've got that, yeah, got that selected. So even if you put a pending order sell limit on that order block, from that sort of area there down to there, you're looking at, you know, around 100 pips from this morning's activity. So I got in for a sell rather nicely. Sorry, let's get out of that, and did quite well with that. Once realised that this was not moving any further, I had the Fibonacci retracement tool on, so going from the high to the low there, and I've just extended that out. And apologies, I haven't made a point of these lines either. I'll come back to that in a moment. So remind me. Of course, you can't remind me because this is a recording. So we then had the convergence of the 5 and the 15 minute down at the bottom there, and price started pushing up. And I think I took 50 pips on that because I was looking at this here because this is the last down candle at that point there where we had a price pushing up. This is also the last down candle before price pushing up. So you can see it came into play nicely at that level there, and that came in, okay, yes, it wicked below it, but it came into play there. So that pushed up. I'm fairly sure it was around 50 pips that I took from that area there. Oh no, that's right. I had more than one position. That's why, because I'd placed one position for this level here, and then as it started pushing up, I added another. So yeah, it was just the two. Sorry, I shouldn't say it like that. 2 positions on that, which gave me 50 pips from that area. And then you might see in the background, I've got this kind of light grey, light orange area where we're looking at zones. We've got one at the top here and one at the bottom. And you can see I've also got the Fibonacci retracement from the low to the high, creating that zone there, which also lines up with that zone in the background. So it's slightly different levels on the Fibonacci. So this is still a Fibonacci retracement tool as well, just marked out differently with ever so slightly different zones. So they're equidistant. So you've got the same zone at the top and the same zone at the bottom from the high, from the high, and he's pointing to the low, from the low to the high, or vice versa. So you can see the price has come all the way down to here, and I think there was another 100 pip move from there. I can't remember exactly where I got in now, but I'm fairly sure there must have been a bit higher up than that then. So now I took 100 from that move there, and then it's just moved that way again rather nicely. And I think it was about 70-80 pips from that. Yeah. We go up to that area there. Yeah, 80 pips. That area I've marked it, you fool. So yes, examples of why I enjoy trading this currency pair, because you get moves like that Okay, slept all the way through that, which is absolutely fine, but still did very nicely out of that move, that move, that move, and that move. And that is, you know, there are additional confirmations to the trade. So we've got the Fibonacci retracement. So we've got the original from the bottom to the top. Same for this one in the background, the bottom to the top, but that's drawn out this zone here and this zone here. Then we've got Fibonacci retracement down here. And actually, I've just noticed as well on this one coming down, I didn't point out that that's sort of pushed back up to the sort of 50% level there, which is this middle green line. But then we've got the extensions of that level there and that level there. And if we hover over that one there, I think if I was to extend that, that pretty much has tapped that level bang on. So normally the way I use this is I would have the Fibonacci retracement set up. Once it retraces up to one of these levels, then that's my take profit 1, that's my take profit 2, and that's my take profit 3. So just letting you know. So we had this zone stretching across. If we had that one from there, then we could stretch that across and say, well, we could be looking for a possible push all the way back up to the top here. But actually, do you know what? I'm quite happy with what I've got today on a Friday. It's now 4:25. So I won't be doing anything else today. But yeah, I know I've said it already, another example of why I love trading this pair. And in fact, yesterday, I didn't do a video yesterday. Yesterday I grew my account 11.25% without big moves like this in it. So that was groovy. I tell you what, I'm probably not well enough, or sort of struggling with brain fog a little bit to explain all the bits that I did from yesterday. Okay, sorry, this was one thing I wanted to say as well, because this is something I've been doing recently on these videos. I've recorded them and gone, I wanted to say that and didn't. So we've got, as I've already talked through, the multi-time frame stochastic, the RSI divergence tool down here. So when price got to this level here, so we've got marked it off as the top of the body of that candle there, and price has come down to it. You've then got this hidden bull indication on the RSI divergence. You've got the moving averages tapped, so you've got about you've got this 5 minute stochastic down in the extreme. You've got, what's that, 1, 2, 3, 4 different confirmations there. So you've got the that level from the body of the candle, you've got the moving average, you've got the stochastic, 5 minute stochastic down the bottom, and you've got the hidden bull from the RSI divergence tool at the bottom there. So that's 4 different confirmations. Yes, getting that for a buy if you were around at that time of the day. That was about 20 past 7 there we go. But then talking about this area here, where so we've marked off from that candle there, price has come along to there. We haven't quite got to a moving average. We're not far off this one here, but you can see on the RSI divergence, you've got a bull indication there. You've got the 5 and the 15 minute time frames on the stochastic down in the extreme. So another opportunity for a push upwards. And then you can see actually now the RSI divergence has given us a hidden bear at this point here. So we've got the level we've drawn from, let's just extend that out there, from this candle here, that little orange candle there. So the last up candle before it starts coming down, mark that off. Prices wicked it, or wicked through it, and then it's giving you hidden bear. It might not move as much, but you've got that additional confirmation. So you've got the 5 minutes stochastic up in the extreme, but you can see that the 15 minutes on its way up, the 30 minutes on its way up, the 4 hour is already up the top there. So it may well be that we'll just sort of float around this area for a bit before it then reacts. So, then of course the vortex. I didn't go on about the vortex either. So what happened when that crossed? So you can see where the green has crossed above the red. That normally means a buying opportunity. And you can see where we hover over that cross there. That's on that candle there. So another confirmation, should you wish to use those confirmations, because I know that some people will analyze but are still looking for additional confirmations to place their trade, because they may be lacking confidence, or they're new to trading. So maybe they are keen, want to get into trading and start doing this, but don't quite understand price action yet, don't understand how the charts move, but want to maybe start off with a small amount of money and use some indicators. And yes, according to some people, I've probably got too many things on the chart here, with that background, with that Fibonacci retracement, the 3 moving averages, and then I've got the multi-time frame stochastic and the RSI divergence. So if I went like that, it looks a bit clearer, a bit cleaner, but I could go off and hide all of these bits as well, and then you might not necessarily know exactly what's what. So I mean, just for additional confirmations of the crossing of the moving averages, and I've said in previous videos that people mock the crossing of the, just relying on the crossing of the moving averages, and I understand that, because if you're a really good trader, you don't need to rely on the moving averages crossing. You're looking at price action, and being able to place your trade and do your analysis without these lines. But a lot of people like to have that additional confirmation. Maybe their analysis is good, and yes, maybe they are using some other indicators, but then for additional confirmation that what they have done or what they're about to do is correct, because they've had a change of direction confirmed with those moving averages. So here, for example, you've had the blue crossing above the red, and both of them are above the 200 there, and then that's gone on a lovely run up. You've had the blue cross below the red, but yes, it's still above the 200, but you can then see that the blue has remained below the red, below the red, below the red, and it's only at this point, just a few minutes ago, that it's crossed above the red. And actually we're crossing above the 200 moving average well, and that's just on the 5 minute time frame. Obviously it's going to be different on the other time frames, but this is where I like to spend most of my time. So that was that. And then I did the 1 minute scalping video the other day, and here's that chart again. So you've got, if you really don't have a lot of time but want to just get on the charts and maybe see if there's any trade opportunities available, you've got this example here where, so I've gone through this already, the extreme trend, the vortex, the stochastic, the threshold. So you've got this point here. If you're looking for another confirmation, like I don't know, there's probably that bit there. No, of course it's not. Is it? I've lost track. I'm only on the 1 minute time frame, but there is that bit. Yeah, there's that bit there. So here you've got the Heikin-Ashi candles. So as I've said before, the body starts halfway along the body of the candle. Sorry, starts halfway along the body of the previous candle. So where you've got these orange candles here, and I've got them set to orange and white because that's my preference now as a little psychology hack, in that if we're conditioned that red is bad and green is good, green for go, red for stop, all that sort of thing. So I've changed the colors of my candles, both Heikin-Ashi and ordinary candles. You may see on this chart, I'm just on ordinary candles. But for the 1 minute scalping, I'm on Heikin-Ashi candles. And yes, the Heikin-Ashi candles do present slightly differently to ordinary candles. But if you're just, as I say, a few minutes on the chart, a few minutes available, wanted to see if there's any trades, or any opportunities to trade, then this is quite a good way of getting into some trade. So you've got the confirmation of this candle pushing above the extreme trend and closing above that. You've got the stochastic, so you're kind of looking to get ready, and of course this is just the 1 minute time frame. You can see this point here is where the green has crossed above the red on the stochastic here, but don't necessarily get in too soon, because it may have crossed and then done something like it's done here. It's crossed there and then crossed back over it again, but it's still all down the bottom, and you can sometimes find that it will snake along the bottom or snake along the top as it's done there. So you get that opportunity where the candle has closed above the extreme trend. You've got the threshold has turned green. You've got, let's pop a vertical line at that point there. So I think I got it, yeah. So let's just zoom in a bit. So we can see that the green is crossing above the red on the vortex. That candle has closed above the extreme trend. And then the next one is your candle for getting into the trade. We've had the green crossing above the red on the stochastic, and the threshold has turned green. So you've now got, and then a couple of candles later, the extreme trend has changed from red to green and is supported all the way up. So if you wanted to look for an opportunity to get in, there's a fairly clear cut one for you there. This one, that candle has closed below the extreme trend. Yes, we've had the threshold turn red, and we've had the red above green on the stochastic, but the vortex is still green above red. So yeah, I don't know, that one's a bit dodgy, because that looks like it would be the start of a possible move, but as you can see, this has stayed green and stayed green and stayed green. So maybe not. That there might have been an opportunity. So where the vortex has crossed there, that candle is closed, and that has been be your trigger point there, but I don't think there'd be many pips in that really. Oh, actually, there we go, 10 pips. So you could have got 10 pips on that little move there, but perfect opportunities like that. What was that? Is that going to give us? Yeah, so 70 pips. Of course it is, because that was what was in earlier, on just that entry on the 1 minute time frame. It's not bad really, is it? Anyway, I'm talking far more than I need to, so I'm going to stop it there. I hope you all have a great weekend. Enjoy whatever you get up to, and I shall see you some point in the near future. Ta-ta for now.